Welcome to Trading Lounge and the Commodities Report, and we'll look at the yields, then the TLT bonds, the dollar, the gold, the base metals, and crude and gas. And I think the best trades out there would probably be gold setting up quite nicely. The other important thing is that we can have a turn in the yields here for the 10, 30s and 5s and so on here. We can have a turn here. In the weekly chart here, we've got 1, 2, 3, 4, 5. Okay, so that's pretty straightforward. And that would be the opposite when we're looking at the treasuries here, the TLTs in this particular case on the weekly, 1, 2, 3, 4, 5. Now, we can see here that there's a lot of volume coming into the market here. We can count it down here as 5 waves. We can also count it here as a little A, B, and C wave here and have one more low in place before we go up. So that's possible. There's two possibilities here. Now, that will be the same coming back to the yields here as well. When we count the 30-year yields up here, from here to here, it counts quite nicely as 5 waves. I can make this 5 waves as well, pretty comfortably. I know when I'm pushing the envelope and I shouldn't and those sort of things. I also know too that being at 5, trading level stuff, is that once touching on the 5, we would see a reaction at that point. And we are seeing a reaction at that point. And the point being is that this is also an impulse wave. It's 5 waves. So very shortly, probably next session, we'll start to look for a low there, and then we'll have a rally and 3 waves, and then we'll have another 5 waves down. Now, if this 5 waves down comes down a little bit too far, then we can say that we have a top. Excuse me. Then we could say we have a top in play. If it's very sort of shallow, and it just sort of comes back down into the space that it was already in or a tad below, then we can look at it as a wave 4 and having one more high to the upside before rolling over into a larger picture at that point. So I think that there's a very good chance that we've got a top in, but I just can't prove it, as I mentioned yesterday. We do have 5 waves here, so we'll just wait for the rally and then we'll have another 5 and we'll see how this extends down. If we get a clear 5 waves down from the top in terms of, let's just clean these up here for a moment. If we get a nice clean we've got wave 1 here. If we get wave 2, which we will because it will be a wave 2 or B wave. So if we get a strong 3rd wave here, then we know that we're going to have 5. If we get 5 waves down here, then we're on our way at that point. But obviously that's a long way. I mean, that's quite deep at that point. Let's go in and have a look at this on, and this will be the same for the 30-year yields as well. But look at that on the daily chart. So, I mean, this is important because if we've got a turn in here, we can have a turn in the dollar and we'll have the turn up in gold. And we are getting the turn up in gold. So it's sort of, yields down, bonds up, dollar down, gold up, all those turning points on those is there and we need to trade those. So this is the count that would leave us one more high here. So we've got wave 3, 4, and 5 on the 10s here, but it still means that we've got a clear 5 waves down here. So we would have a 3 wave rally here. So we could have a small move down here and then this move up here to finish it off. That's possible. So what we can do is we can also look to short this leg down here. We may not go very far, but if it is going to be a 3rd wave coming down here as 1 and 2 and 3 down here, then we need to be on that, because that will be 4, 5 at this point, and then we're going to get an ABC back up and then down again to that. Oops, the daisy gone a bit haywire there, but yeah, so we can look to short in this area through here. Now, we don't necessarily need to short this particular market by any means, but the bonds will be open for the long trades at that point. And because we've got 5 waves here, that means we'll get another 5 over here. It's just how far it comes down. But yeah, the gold market, if we have a look at the 30-year yield for a moment. So we've got on a daily chart, wave 3, 4, and 5 up here. If I go to the, say, I don't know, what I think we were looking at on the 4-hour chart yesterday. So from this wave 4 here, we can go 1, 2, and 1, 2, 1, 2, 3, 4, 5 for the third, fourth, third. So I can fit 5 waves in here, and we can do the same with the 10 years as well. This little area in here is looking, can I get that in here? It's the same as the 10 years, exactly the same pattern on the 10 years. So we've got 1 and 2, and then 1 and 2, nice strong third wave, fourth and fifth for the third, the fourth, and we haven't counted this here, but we're close to having that low in place there. So it's going to be, it is 5 waves, so as I mentioned, we'll be looking for some type of rally, and it may even test the 5 and then come down at that point. But we'll see, after this, in this leg here, we'll see the personality of this, because if it's going to be a third wave, it's going to be sharper than this first wave coming down. If it's going to be a C wave coming down as an A, B, C, it's going to be quite lazy. So normally wave A's coming down are quite sharp. This is not that sharp, really. I mean, it's reasonably sharp, but it's kind of got the personality of a wave 1 rather than a wave A. So it's kind of interesting. We can have the turn. We just need to confirm this situation. And like I said, on the Treasury bonds here, it's the same thing here as well. Now, obviously, we've got some really good volume here, and we know some of the big fish that have been short in this market are covering that. So it's on the weekly there. So if we go to, let's just go to the 2-hour chart here. So this is the same pattern as the yields, but to the upside. So if you can follow me here, we've just got wave 1 and 2 here, and then we've got 1, 2, 3, 4, 5. So the third wave, fourth wave, yeah, I have to pull that apart a bit. Looks like there's okay, 1, 2, 3, 4. Yeah, we're close there. So that will be the 5 waves up. So we'll be looking for a counter trend in 3 waves here shortly, and we'll have a look at this. We should be able to look at this being we should get at least an equal move over here for this. That's why, but to call this wave 5 waves up for wave A or wave 1 is still open at this time. It's appearing like it will be wave 1, but got to have the evidence before we can move. It doesn't stop us trading. We can be long here. This will be the same pattern gold is delivering as well. So let's just go and have a look at the US dollar, the DXY here. So with the DXY here, if we've got a top in for the yields and a bottom in for the bonds, then it's quite possible we've got a top in here for gold here. And that means that we don't go up from here to here. This is going to find support here. It's at the 60% retracement level. But otherwise, we can just continue down at this point. It just depends on how you want to count this here, that's all. You can put wave 1 here, or wave A, and then look at this as an A, B, and C for the wave 2 or B, and we just come down from that point. Or we could look at this as a triangle pattern for a wave 4, and then have wave 5 coming down here as 1 or A, and then an A wave, a B wave, and a C wave up here. So this little area here is the 50-60% retracement area here. This is where it can turn up. And yeah, so as an impulse wave to the downside, we just don't have enough information yet to call it in on that. So if we go to we can just drill in and have a little bit of a look. So in this instance here, we can look at it as a WX and a Y down to here, as an ABC down to this point, and we've got the low in here already. we could look at it as an A and a B and a C wave down here, and then we'd also get one more little move and then another move here, and that would also suffice as a B wave here. But the problem with that is this is a little bit too more complicated up here, so it counts better as a WXY at this point. But we still need to sort of sort this out a little bit here. So yeah, this is a 50-60%, so it can move up from this point. If we look at this on, I'm not sure what we've been looking at this on. If I was looking on the bearish side, I think we're looking on the 5K. On the bearish side, we'd need to look at it like this here. So this being the top here as 1 and 2 over here. I just don't like wave 2 here. That's the thing I don't like about this. It's more like a B wave price action in here. Complicated, you know. And then 1 and 2 and 3, 4, 5 coming down here for the third, the fourth, and the fifth, which would make wave 1 and ABC for 2. There is a case of looking at all of this here as the third wave at this point here as well. So it doesn't really matter, because if we're going to short this anyway, then we'll still need to wait for this to give an extra move down here and come back over here as well. And we'll pick it up over here, because in the meantime, this can just move up at this point. You know, we're looking for a low in here yesterday. I won't go into any more intraday here, but I'm just wanted to say here that this is that it's just not resolved here, which is the bigger direction here, as it is in the the yields and the bonds. There, we can have a turning point, but it's just not confirmed just yet. But when we look at gold, it would suggest that the top for the yields is in place and the bottom for the bonds is in place and the top for the dollar is in place, and there's a turn at that point, because we're basically getting I should go back a bit. I won't go into the bigger picture, the weekly and the daily and all that, but in a nutshell here, we've been working wave 1 up to here and then an ABC for wave 2. Right, and we've traded that. We've been in and out. So here we've had this as wave 1, 2, wave. Let's move that out of the way. Wave 3. So 1, 2, 3, 4, and then 1, 2. Well, anyway, 1, 2, 3. Yeah, they're not fitting very well, is it? Maybe I need to drag that over here. It doesn't matter. Anyway, wave 5, 1, ABC for 2. So we've got wave 1 and 2 and 1 and 2 here, and now yesterday we were talking about having 5 waves up here. I just got to fix my drawings. It looks like I've been drinking again. But yeah, I mean, if you can see, we've got basically 1, 2, 3, 4, 5 here, so we can plonk that there. We've got 1, 2, 3, 4, 5 there, so we're looking for wave 2. It looks like a bit of an impulse wave to the downside, so we can look at it probably like this and then pushing up here. So that will also give us another entry up here. Well, you can put it on the top. I'll put it on the top here, but you can bring it down to the second low over here for this a bit later. You could buy the pullback here too if you wanted to. So yeah, so that's looking very nice. And as I mentioned yesterday, any gold stock that's got the same sort of pattern would also be a buy at this stage as well. Okay, so just look for that. Perhaps on what's today? It's only Wednesday today, isn't it? Thursday, Friday. So okay, I'll make a bit of an effort to have a look at some US and Australian gold stocks, but they will all be much the same. Not all of them. That's why they can all be completely different. You know, I mean, gold stocks have got, you know, I mean, the cost of product, the cost of getting it out of the ground is different with various companies, and so they'll have different. Some of them have different patterns, but if you can find ones that have got patterns. Find ones that have got patterns that are similar to this, that are moving on an intraday basis, then they're the ones to go for. But yeah, look, this is looking fantastic, and our aim was to get a few positions below the level of 2000 and then start building pretty radically sort of up here through this area here. Could I have made a mistake anywhere? I don't think so. I think, not that I don't make mistakes, but This is another wave 2 here, by the way. So we've got, we're in the third of the third of the third of the third here. So we're looking for a bit of a top in this is the other thing too. If we're looking for a bit of a top in the Nasdaq and those tech stocks there, and they pull back, and they'll pull other stocks down with them as well. So there is a bit of a difference, that you've got to kind of keep an eye on with stocks and commodities together. Because you can have the commodities going up and the stock going down because being pulled by the stock market, or they can run together. You got to kind of see how they're sticking to each other. Okay, but yeah, I mean, I really like this here. So we've been building in, and we'll just continue to do that. I'm not going to move the stop anywhere closer to here. This is, this is major level 2, group 1 here, and group 2 below here. So we're just going to leave the stop below this group 2 here for the time being. We'll see, big numbers attract big orders and can skew the wave count, the pattern. So we just need to be careful. If we get lost in here, it's okay being lost. We'll just stay lost until we see the light. Okay, so that's that. And silver's pretty much the same as well. So, but it's in the bigger pattern for silver, on the daily and the weekly chart, it's kind of completely different than gold. So there's a few other weird things that can happen at this point. Now, one of the things I'm not sure about is this move that we've got up here. I could look at it as 1, 2, 3, 4, and 5. That would be sort of okay to do that, and I would probably need to push this up here in that case. But it doesn't count very well. I mean, it looks like we've got 1, 2, 3, 4, 5 here. So maybe an A and a B and a C, and we come down further. So this would bring us back down to, or could, doesn't have to, but could bring us down to this space here. We also want to look at building above over here as well, which I could just put on the top of this move here. I mean, this could be viewed as 1 and 2, 1 and 2, and 1 and 2 building to the upside as well. There's I could even look at it as all of us an A wave here, an A, B, C here, and then down here further again. But I won't panic. I'll just keep with this. I mean, if the 2350 becomes the retested resistance, then we'll need to be on our high horse at that point. So with this long trade here, we need the first low below the level, and then put the stop under there. Okay, then that will give us a small loss at that point. Or you can take them off now and all that sort of stuff. But we're playing the long game here, so we need to build here, and yeah, it can be a bit scary, but we also need to protect what we have here as well. So anyway, enough waffling about all of that. This is the Dalian exchange for China, the iron ore, and the Singaporean exchange. Let me just double check on that as well. What's a daisy? What's that stick in there for? That's just coffee. Coffee's at the 61.8%. So yeah, if you wanted to. And also this is group 2 here. So 165, 172, and 180. This is all of group 2. There's going to be plenty of resistance around here for coffee, but I want to have a look at the. So this is in USD here, and this is such a nice pattern here. So we've got this nice A, B, and C here, and then 1 and 2 in here, and then 1 and 2, and then 1 and 2, and we're in this third wave here. So we can see that in different stocks. So Fortescue here is just really pushing off nicely, 1 and 2, 1 and 2, 1 and 2. We're going to be way up here somewhere, Plus, the yields on this stock are fantastic. So Rio's a bit sluggish, but hasn't taken out the top here like Fortescue, and Vale will be the same, and all those sort of stocks. So basically, base metals, that's good, and yeah, and uranium is the other one here. I'll just go to copper first. So copper's been triggered in here as well. So that will trigger the likes of BHP and so on. So BHP here. Yeah, so BHP's, we were talking about this yesterday, having a little correction in here, and and pushing up, they'll just keep pushing up. So that's all good. We could be in a larger triangle pattern here with this in terms of what we're seeing in XME. We didn't really get to have a look at that. Where's that chart actually? Yeah, the XME here. So there's two things that can go on here with the XME is that we can go an A and a B and a C and a D and an E here and be done with it, and then we're in a bullish market, right? And there's nothing wrong with that. The only thing that's bugging me about this is that little first move here just appears to be corrective. So I'm wondering if we get an A, B, C here, and then we have a move down, and then we have a move up, and wave E is over here for that. So yeah. So just when you thought you got it, and you get hammered. So not all the boxes are ticked on this just yet, but the fact that it's above the 50 here and making new highs, you know, breaking previous, because it's all been downhill, and breaking these highs here, it does give it a good, you know, bullish bias at this point. So that's yeah. So there's, you know, there's lots of stocks in this space that, you know, are like this here, but we have to run with the wolves, and we have to put our trading hat on, you know, and take the trade setups, which we have, so that's all good. And yeah, so that's copper. We'll see how this goes. So copper could do yeah, just see this move here. You see how it looks like an ABC pattern here, you know, and the LME is a bit the same as that. But when you have a look at this copper on terms of the US futures, then that move to the upside here that we just talked about looking corrective here, it counts as 1, 2, 3, 4, 5. So it counts quite nicely as an impulse wave to the upside. So I don't know if to look at it as wave 1 with an ABC back for wave 2, or look at it as an A and a B and a C wave coming up here, you know. So that means that this here, coming back to this one, this would be basically an A wave, a B wave, and a C wave here. I've got all that mixed up. I'm not dyslexic, I'm just lazy. So yeah, and then down here. So this is something that we'll need to work out. So an A wave, an ABC for the B wave and the C wave, and then move up. It's either that or we keep going up here. But either way, we're doing all the right things at the right time, and we're understanding both sides of the market. So we can give ourselves a pat on the back. Over to uranium here. So, you know, as I mentioned before, the trend is good, and it's still sort of winding, you know, to the upside. It's going to struggle all through here because we're in a series of 1 and 2, 1s and 2, 1s and 2, 1s and 2s. And now we're in 4s and 5s all the way through here till we get to this top in here. So this is going to be laborious and complicated, and we'll have spots in here where we won't know what's going on. We're going to keep the stop out of the way, completely out of the way. And yeah, we're not going to add to this particular position until we get way over here somewhere. And then we'll start building again and building in through here. So anyway, nothing really to do here, nothing to sort of seize. It's all good. It's just going to take a lot of time here, that's all. Maybe it's quicker. We'll see. And we come over to the energy sector. Okay, so I'm in two minds with being bullish and bearish here, and I just want to explain something, is that we can have this here, this top here, as an A wave, and then a B wave in here, and then it's a bit weird, but a C wave down to here. So 1, 2, 3, 4, 5. I know it's a bit weird and you can throw stuff at me, but basically looking at this here as a corrective pattern in here, and then looking at this here as wave 1 to the upside, here as wave 1, and then an A and a B and a C here for wave 2 on this low here. That means that we'll need to push up from that point, so we'll need to see 5 waves up there. The other side to this is looking at it a little bit differently, and looking at it in terms of this move down to here as an A wave, this move as an A, B, C for the A wave, and then an A, B, and C for the B wave here, and then down for the C wave. So we need to come down further here. So we don't go up on this turn, we actually come down here further, and then we go up at that point. This is the XLE, of course. So yeah, so then this here could be viewed here as an A wave, a B wave, and a C wave here, 1, 2, 3, 4, 5, and finished. And then we just keep going up here. Or we look at it as 1 and 2 and 1 and 2 here, and then go down. And in terms of looking at it as 1 and 2, we would still need to look at this as an A wave, a B wave, and a C wave. So I still need another little move up here. So that would be the A wave sitting over here for this. So an A, B, and C moving up. So it's going to be a little while before I can work it out here. And as I mentioned yesterday, I need to see a nice impulse wave up there to turn bullish on this. So there's two ways it can play out, and that's the 61.8% retracement level there. So we'd expect it either way to play out at this point, to stall there. So we're not going to know for a week or two, I guess, in here, maybe earlier, who knows. Things always take longer than we expect. So anyway, we'll just chill, and then we'll pick it up. We'll get on the bus when we're ready to get onto it. So we don't have a short trade yet. We don't have a long trade. We just need to see what comes out of the box. So that's that. And then this puts us into crude here. So with crude here, we can do the same thing as well to a point. We can either have this as an A and a B and a C wave for wave 4, and then come down for wave 5. Or we can have this wave 5 already in here as a low, and we need to look at this as 1 and 2 in here, and then continue to move up. I'll just have a look at crude on crude, right? So this is a daily chart. This is the futures here. So in this case, if we take that as the low, then we can look at this as 1, 2, 2, 3, 4, 5. So we could view this, I mean, there's different ways of viewing all of this little spiky bit here. You could view it as an A and a B and a C wave up here. But if we just take it at face value and take that low there, we have 5 waves up here. And then currently we have basically an A, B, C pattern down here. So we could view it as a couple of different ways. I mean, we could look at it as bearish as well. But as it stands, we can look at it, I mean, we can even look at this as an A, B, and C here for the A wave, and then have an A, B, C for the B wave here, and then go up for the C wave. If we take that as face value as the low here and take 5 waves up there, we can look at it as wave 1 and back for wave 2 at this point, and then move up. Now we're getting a strong impulse wave off the low here, which is good. On the intraday basis here, we can look at this. It's 2 enough. Let me just go see if I've got this. I don't have it there, but let me just go back into 1 hour then. So the way that you get the low in here at the moment, because this is a nice impulse wave, there's no mistake about that. And because of that, then because that's an impulse wave, that means we'll get an ABC pattern here, and then we'll get another 5 waves up. So beyond that, I don't know if we come down or we get a wave 4 and then we get a wave 5 and then we get an ABC and then we go up at that point. So I don't know if we get 5 up or we get 3 up. There's different ways. As an A and a B and a C here, that counts nicely. We could, if you're going to count this down here, you'd have to put this as 1 and 2 and 3 and 4 and 5 here. That's how that would have to count out. And that counts okay here because you can count this here as 1 and 2 here, then 1, 2, 3, 4, 5 for third wave, fourth wave, and fifth wave here. So it does work. It just doesn't really have the right look and feel about it to me. But crude market's a funny little thing, so we've got to kind of figure it out. So Yeah, there's different ways to look at it, and if I was going to look at all of this, if I was looking at this as 1 and 2 here, and then, because that's the other way to count it, is go to 1 here and 2 here, and then this would be wave 3 here with wave 4 over here. This would be 1, 2, 3, 4, 5 here. Okay, so on that basis, then we would look at this as top here and then the bottom here for this, and the 38.2% retracement level is here, and that would be about right. So we would take the wave 4 1 lesser degree and the 38.2% retracement level, and then that would put us there. So but having those 5 waves there, that's going to give us another 5 waves up. Now the other 5 waves that's pushing up here, it doesn't have to go up that far. It could go, it could go to the 50% or the top of this one, and so on and so on. But if we look at the 80 here, we could say that, in 3 waves up here, we could say that if the 80 became the tested support at this point in time, then which is to me, it's just trading level stuff, which is a major level. If we got support on here, then we know that we're bullish at that point. But even so, that would be like a wave 3 at that point here and a wave 4. So I think that what we can do is you could trade up to the 80 and get out, because it will, there will be some type of correction here. And then we could trade up to that point, and then we could get out, and then we could, if we get 5 waves here, then we can buy the pullback over here for this. But that's sort of how it will play out, really. Wave 5 may not go that high, probably 80, just above 83 or around 83, and this will probably be a bit lower in here, and this will play out across the 80. The 80 will, large numbers attract large orders, and they'll skew the wave count, and it'll make it all sticky at the sticky number, as they call it. So we still need to get 3 waves up here. So it's a little bit like the bond market, really. We've got 5 waves up, but I don't know if we're going to get 3 or we're going to get 5. In due course, we'll know. It will be easy peasy, but in the meantime, I just don't know if this is going to be wave 1 and 2 here. Just don't know that yet. But it does give us an opportunity to trade up there. That because of that 5 waves, we're going to get another 5 waves. So that's something. So coming back here, this is 5 waves up here. I won't go into it, but we're left with this here. So I can see that this is 5. I mean, I could get an A and a B and a C out of this here, and we could go straight up from there. But otherwise, we'll come back. So what I was sort of thinking is that, what happens if we just get this here, and then we come down here? If that is the case, then you can go long above here, or if you can track the 5 waves here, then you can, go long at that point. The 50-60% is still quite low at this point, so it's possible for it to come back this far. But the reason I don't think that it will come back this far is because of wave A here is so short, So because basically wave C and A will have the same length, roughly the same. Take that with a pinch of salt, right? So that will bring us down to, this is also group 2 here. So from $70, we've got Fibonacci numbers 1, 2, 3 to make up group 1, and then the midpoint, and then group 2, 76.50, and so on. So this should stay within group 2 here, a bit like this one over here trying to get into group 2, So it should stay in group 2. So I think the buy here would be at 76.50. That would be the buy at this point. So you can buy the pullback, and it'll be in there somewhere. If you can't get it and so on, then look for a little classic trading levels pattern at the 700 here. This is a CFD product. The $77.20 actually, but $77 is fine. Look for a little classic trading levels pattern and trade in, go long from that point. Just in here. That would be the safe trade, because you have the first impulse wave up here as well. Okay, sorry to waffle on too much. Okay, over to natural gas. This is the United States Natural Gas Fund. we've talked about this a lot, of this particular pattern being a triangle pattern of an A and a B and a C, and I had a bit of difficulty. I mean, I got it okay-ish here, but there was some variations that it could have been because it was just getting a little bit small at this point. I mean, we could even look at this as a WXY here, and then look at this a little bit differently as well, and look at this as wave 1 here, and 2 here, and 3, 4, 5 here in this case, you know. I still think it's got further to go down, whichever way we want to look at it. So this will be, let me just check where, first of all, anyway, so we need to take out this low here, right? So that's, and if we're going to take out the low, and we've got, if this is a triangle pattern, we can take this length here and sort of add it over to here. So that should take, we should get pulled down to, in this one, should get pulled down to very close to $5 here. But let's just have a look at the, just before I look at this gas market, I just want to have a look at the futures here. Yeah, okay. Oh, they're sort of tuned in a bit better. I mean, this number's going to be a bit sticky here as well. So this would also be support here. So the support is 265, roughly $2.65, 280 and 272 in here, which is group 2, here. This is all a group. This is where the support is going to come. So I could say that the norm is that if this group 2 here becomes the resistance, so that means that this would come down here. There might be another little move in here. I mean, this looks like a nice third wave in here. So it looks like it's 1 and 2 and 3 and 4 and 5 here, but there's still this 1 and 2. So there's probably something like this here. This is probably how it'll play out. So it's really only if this group 2 here becomes the resistance here, right, then this price has been rejected at that stage. So this would need to, it'll be hard for it to get through, but eventually it'll get through. But if it came through and retested it and then dropped into a new low from below this one here, then what it's actually telling us here, if that occurs at group 2 here, what it's really telling us is it's rejecting this number here. And if it's rejecting this number here, then it just drops down to the next number, which is the 250 here, and then down to the 2 at that point. So we'll see how it goes. It's going to be spending some time here. I know Jason sent me some charts through on a variation of this, so I just haven't had time to look at that, but I will, and then I'll present that as well. But yeah, in the meantime, yeah, I think that's 1, 2, 3, 4, 5 to that point. So I think we've still got this one to go on here. When I'm looking at on the CFD product, this top is above this top, so just be a bit mindful about that. But it does seem to have a nice 5 waves up here. Anyway, we'll see. We're not going to be trading around this number. Forget it. Right? We just we'll have to spend 2 weeks here at least, so it sorts itself out. And this number will become the support or the resistance, and we'll make a move from that point. And I forgot Bitcoin as well, so sorry about that. So I just remembered because I forgot it last time as well. So let's have a look at that. Okay, so with Ethereum here, I've been looking at this with wave 4 over here, and I think Kitty upon our crypto analyst, who always does a fantastic job, I think he called this as a triangle pattern way before I did. But anyway, an A, B, C for the A wave, the B, the C, the D, and the E wave here plays out quite nicely because I don't quite have 5 waves moving up here. And I can get 3 out of this, and I'll probably get 3 out of this, and obviously that's 3. So that's quite possible at this point. So we could put this in here. The second thing here is that we could also look at wave 4 coming a bit lower here as well. So that means that this would be the A wave here, and then the B wave would be over here, and this would be 1, 2, 3, 4, 5 coming down here. So that's possible as well. Now we've got a long trade in here, and I just don't like taking losses. I don't mind a small loss or breaking even and those things, and I don't mind adjusting the stop from here to here, and you know, having a small profit or small loss for the sake of staying in is good. But I am moving my stop up to this point. And I'll find a way to get back in. This is not hodling. This is just trading up to the 40 here. So it has been, the interesting point here is that this is a corrective pattern and we haven't made a new high above this. So in a way, we've still got further upside here. There's just, it's all good. It's just how this is going to play out. I was thinking this looks like a little bit of an impulse wave here. We may be able to get a little ABC pattern in here for the wave 2 and then a push up here. But yeah, look, not a lot is happening at this point. It's stuck in group 2 here, 36.50, 72 and 80. This is where it's sort of sitting at the moment. We're getting higher low, so that's all good. It's just that this is a corrective pattern here. It doesn't appear to be 5 waves here. It's an A and a B and 1, 2, 3, 4, and a little bit messy to finish off in here. So that means that this low can be taken out. So it's possible for this to drop down here and then push up again at this point. So the Ethereum, while we're here as well, we were looking at this being wave 1 here, and we could put wave 2 here, but it's probably not looking that good, and we could also put wave 2 over here. The main thing here was to look, we're talking about going long above this top over here, and we could drop it down, and then eventually we dropped it down to this point here. Now in this case here, we may get 5 waves down here for an ABC pattern, and then push up at that point. So we're ready and waiting. We just haven't been triggered yet. So yeah, so that's where that is at the moment. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.